Well, thank you so much. This is a great honor to be here, and I was inspired by all your stories and all the incredible work that you're doing. First of all, I want to thank Bob Dickerson and the Building Alabama Reinvestment Alliance for asking me to keynote today. It is a great honor to be here before you and to speak today about this important topic. I have been in the CRA and fair lending field for more than 25 years. After a while, you think you have mastered your field, but then you quickly become humbled when you realize that there are constantly new and overlooked ways of looking at fair lending and civil rights issues. I have been proficient with the legal technicalities of the law and the regulation of the Community Reinvestment Act for some time. I'm actually one of those strange policy wonks who enjoys working with CRA data and Excel spreadsheets. What I did not realize until a few years ago was the total devastation of decades of redlining. You could say this type of discrimination had its antecedents in 1619 when the first slave ship appeared on the East Coast. You could say that Reconstruction, right after the Civil War, provided a glimpse of a multiracial society in which economic and political power was shared, or at least more equitably distributed. Then the violent backlash began after the election of 1876, resulting in the Black Codes and Jim Crow. Decades later, redlining was invented by, of all institutions, the federal government. All of these events and dates are pivotal regarding where we are today. They establish a system of vicious and systemic discrimination that focused oppression on African Americans, but it afflicted all people of color. The result is predictable: little or no wealth, poor health outcomes, less education, low-wage jobs, disadvantages that seem overwhelming were it not for the indomitable will of an oppressed people. One can simultaneously be ashamed of this country, but also an adherent to its best ideals. The founders epitomize these contradictions. An enslaver wrote these words: "We hold these truths to be self-evident, that all men are created equal, that they are endowed by their Creator with certain unalienable rights, that among these are life, liberty, and the pursuit of happiness. These lofty principles derive from religious prayers and teachings that all humans are sacred in the eyes of the divine, and as such should be respected and empowered." However, Thomas Jefferson most likely had white men in mind when he wrote these words. However, this limitation did not deter others from applying his objective to all humans of all colors, hues, genders, and sexual orientations. A century later, the country fought a war over one of the most evil forms of racial oppression and subjugation. In the midst of that war, President Lincoln traveled to Gettysburg and in his brilliant succinctness stated, we highly resolve that these dead shall not have died in vain, that this nation under God shall have a new birth of freedom, and that government of the people, by the people, for the people, shall not perish from the earth. Government of the people and by the people shall not perish. These words have recent resonance as we emerge from an election in which some forces pushed for an outcome that was not democratic, and as a brutal autocrat now kills thousands of innocents in his war against Ukraine. And these words propel us towards fulfilling a democratic promise, not only governing democratically, but creating a more democratic economy through CRA and the fair lending laws that give everyone a fairer chance in the race of life, something that Lincoln kept coming back to in his speeches. It is also my belief that CRA's goal of a more democratic and equitable economy also produces a more efficient one, since more participation from all segments of society in economic decisions brings out increased enthusiasm and better ideas for making an economy work. We saw some of those today in the speeches just before mine. Lincoln stated that the leading object of government is to elevate the condition of men, to lift artificial weights from all shoulders, to clear the paths of laudable pursuit for all, to afford all an unfettered start and a fair chance in the race of life. Yet Lincoln was confronted by his own contradictions. He was not an integrationist nor an abolitionist. He knew that slavery was evil, but initially was in favor of colonization under which African Americans would be resettled in Africa. However, his views evolved, likely influenced by great civil rights leaders like Frederick Douglass. We do not know exactly where he would have ended up had he not been assassinated, but most likely would have embraced the short-lived economic and political democratic programs of the radical Republicans during Reconstruction. This is the central tension in American history. There were leaders who had democratic impulses and who wrote these down in visionary documents, but were also limited by their racism. Some abolitionists, like William Lloyd Garrison, reacted to the endorsement of slavery in the Constitution by literally burning the document. Others, like Frederick Douglass, decided that the Constitution could be employed to hold the country to its ideals and to empower all people beyond white men with whom the Founding Fathers were preoccupied. As America transitioned from an agrarian economy to an industrial one, racism found new forms of expression in creating a segregated and unequal society. In the midst of a Great Depression and in a genuine effort to uplift the dispossessed through the New Deal and a program to rescue families from foreclosure, the Roosevelt administration nevertheless invented redlining and exacerbated segregation. Within the administration, there were civil rights figures, including his wife, but the overwhelming racism within society guided the Homeowners Loan Corporation, or HOLC. HOLC sponsored the creation of maps that classified city neighborhoods by risk they posed to lending institutions. Neighborhoods were color-coded, green for the most desirable neighborhoods, while red classified the most hazardous ones. The classifications were guided by some objective criteria, such as the quality of the housing stock, but a heavily weighted factor, if not the predominant factor, was the racial composition of the neighborhoods. A significant presence of African Americans or an in-migration of African Americans usually resulted in the classification of hazardous. A presence of other undesirables, such as Jews, which is me, or other recent Eastern or Southern European immigrants, often propelled a neighborhood into the red category. These classifications later influenced the maps created by the Federal Housing Administration, FHA. The maps and their racist assumptions subsequently guided public and private sector lending across neighborhoods. In the post-World War II years, FHA guaranteed lending dominated and contributed to segregated white suburbs and established a white middle class of homeowners. African Americans were systematically excluded. Only 1% of mortgage loans, only 1%, from 1930 to 1960 went to African Americans, 1%. The institutionalized racism in the public sector and in the lending industry was aided and abetted by the KKK and white supremacist violence. NCRC studied the impact of the HOLC maps on the fate of urban neighborhoods classified into the various risk categories. We found that nationally, 91% of the areas classified as best are middle and upper income today, while 74% of the areas classified as hazardous are low and moderate income today. By race, 85% of the best areas are predominantly white today, while 63% of the hazardous areas are majority minority. The average poverty rate increased from 14% in the tracts in the lowest quartile of historic redlining score to 28% in the tracts in the highest quartile of the historic redlining score. In 2019, black homeownership was lower than it was when segregation was legal. NCRC also found statistically significant associations between greater redlining and pre-existing conditions for heightened risk of serious health conditions like asthma, diabetes, hypertension, high cholesterol, kidney disease, obesity, and stroke. All these conditions made the hazardous Hulk communities more susceptible to COVID during the pandemic. On average, life expectancy was lowered by almost 4 years in the redline communities when compared to the communities that existed at the same time but were higher graded by the Hulk. NCRC partnered with the University of Richmond to create digital and historical maps. One can go to our website and for hundreds of cities, look at how neighborhoods were classified and what the impact is today. I did this for a Birmingham community that was predominantly African American while the Hulk maps were created. The community was near Smithfield Court. Here's what the appraiser said. This is in the late 1920s. Both sales and rental prices in 1929 were about 20% off from the 1926-1928 peak. Located in this area is Smithfield Court, a few low-cost slum clearance projects containing 544 units. This area is generally considered real African-American property in Birmingham. There are other words used, but I substituted for African-American. You can use your imagination. Locations of property within this area justifies policy of selling rather than housing, vandalism, difficulty of rent collections, city jail and area, heavy traffic, Pan American Petroleum Refinery in northwest portion presents fire hazard, Birmingham Gas Company in area, obnoxious odors, noises and dirt, fertilizer plant in area, 3 main line railroads. The disadvantage continues today, ladies and gentlemen. Here are the current socio-economic statistics for the community. People of color, 94% of the residents. Life expectancy, 69 years. Poverty rate, 34%. Rate of serious health ailments, asthma, 13%. High blood pressure, 56%. Recently, a new study found that public and private sector entities continue to place facilities such as oil rigs that exacerbated the disadvantage of the red line areas. It seems like once damned, forever damned. Note the refinery and jail recorded by the appraiser in the community above. The Hulk racist maps created and codified disadvantage more than 80 years ago. This disadvantage became institutionalized through lending practices, public sector zoning, and planning, and white supremacist violence. Your destiny was baked even before your birth and by your race and zip code. A scandalously unfair and unequal society emerged contrary to the ideals of the Declaration of Independence, the Constitution, and the Gettysburg Address. This society is strikingly different than the society described by prominent conservative thinkers like Charles Murray, in which opportunity is plentiful and only limited by individual effort. However, these thinkers are incorrect. It is not the stereotype of the lazy welfare queen that consigned people to dismal fates. Rather, it is structural and institutional racism. The public and private sector continue to deny African Americans a pathway to the middle class, an opportunity for upward mobility by shutting them out of homeownership. Now I get a little more upbeat. If you think that these daunting obstacles would demoralize a people and keep them down, think again. You do not need me to tell you about the heroic civil rights struggle that spanned decades involving leaders like A. Philip Randolph in the 1930s and 1940s, to Reverend Dr. Martin Luther King, to Reverend Dr. William J. Barber II today. It was not only the leaders. They would not have succeeded if it were not for the ordinary men, women, and children in the streets risking their life and limb. Bob Dickerson has told me memories about the church bombing in Birmingham. Bull Connor was defeated because only love can drive out hate. One set of laws that the civil rights movement secured was the Community Reinvestment Act, the Home Mortgage Disclosure Act, the Equal Credit Opportunity Act, and the Fair Housing Act. These laws build on the premise of the Declaration of Independence, the Constitution, and the Gettysburg Address. To create a more equitable society and combat redlining, CRA requires banks to serve all communities in an affirmative manner. ECOA and the FHA Act prohibit discrimination in housing and lending markets. HMDA creates publicly available data showing loans, denials, and pricing to various demographic groups, including modest income borrowers, people of color, and women. Inspired by community advocates, these laws empower communities to hold lending institutions publicly accountable. Any member of the public can use HMDA data to assess whether particular lenders are giving people a fair chance in Lincoln's race of life to acquire wealth via home ownership and small business ownership. CRA requires federal banking agencies to examine and rate banks on the extent of their lending, investment, and services to modest income communities. Any member of the public can comment on CRA exams and merger applications regarding a bank's fair lending and CRA performance. This codifies the Gettysburg imperative of government by the people, in that a law mandates the input of people who have deposits in the institutions that are making decisions about which communities will prosper via loans. Well, how well has CRA and the fair lending laws worked to achieve a more equal and democratic society? Before I offer some thoughts and statistics, it is important to remember that one set of laws addressing one aspect of discrimination cannot be expected to remedy all the ill effects of widespread discrimination that envelops multiple sectors of society. A quick way of thinking about this is to recall where we are as a country, a land of unfulfilled promise and contradictions that has nevertheless achieved some significant success. Yet much progress remains to be achieved in tearing down the walls of racism and exclusion. From 2009 through 2018, NCRC calculated that CRA-eligible lending in Birmingham has included almost $7 billion in mortgages to low and moderate income borrowers or TRACs. Just think about that for a second, $7 billion. During these years, banks made $3 billion in CRA-eligible loans to businesses and low and moderate income TRACs, $3 billion in small business loans. However, we cannot rest on our laurels. In Birmingham, using HMDA data from 2018 through 2020, NCRC finds that low and moderate income census tracts contain 31% of families but receive just 12% of home purchase loans. 31% of the families, 12% of home purchase loans. Communities of color contain 25% of families but receive just 10% of home purchase loans. In FHA lending, racial disparities in pricing are present. Independent mortgage companies made just over 7,000 FHA home purchase loans, and 76% of these went to African Americans during the 3-year time period. The median closing costs were $5,200 for African Americans and $3,537 for whites. This is a difference of $1,644 in closing costs. There was a racial disparity as well in closing costs in the case of banks, but it was smaller at $525. What accounts for these striking contradictions? We observe progress overall, but significant disparities by race and income of neighborhood. It is beyond this speech to thoroughly explain this, but it is clear we, the public, private, and nonprofit sectors, must work harder to underwrite and market safe and sound loans more aggressively in underserved neighborhoods. We must simultaneously tackle other barriers, including lack of access to decent-paying jobs, quality schools, and health care. In addition, CRA has not been implemented over the years in a consistently rigorous manner. The institutional will has ebbed and flowed. Yet I can report on 2 particular success stories showing that enforcement and advocacy has propelled lenders to make more loans to underserved communities. In one case, a sizable regional lender settled with the Department of Justice and the Consumer Financial Protection Bureau in 2016 over redlining. Since then, this bank has worked harder. NCRC's Fair Lending tool revealed that of the top 20 lenders in Birmingham, this bank was among the leaders in making loans to underserved communities. From 2018 through 2020, of the 1,000 home purchase loans made by the bank, 47 went to low and moderate income borrowers, 42% to people of color, and 22% in communities of color. It's much higher than the stats I just cited a couple of minutes ago. One bank after one fair lending settlement. Progress. In another case, NCRC and our member organizations commented on a bank merger application, asserting that another large regional bank was lagging its peers in making loans to people of color. Lagging. The FDIC agreed. It approved the bank's merger application, but required the bank to submit a plan describing how it would improve its lending to people of color. Since that time, NCRC's fair lending tool revealed that this bank was also a leader in making loans to people of color, exceeding the percentage of loans to people of color of most of its peers. These two case studies are victories which I'm sure many of you in this room are continuing to work on sustaining and improving. But we want more victories and more discernible progress in combating long-standing disparities caused by institutional and systemic discrimination, which brings me to CRA reform. Since CRA's implementation in the late 1970s, the most substantial changes to CRA regulations and exams occurred in 1995. Just imagine that. I was just starting at NCRC. The technological and banking landscape has changed since then. Something called the Internet came about. The Internet transformed from a novelty to almost a necessity. While new approaches such as online banking expanded, old problems such as racial disparities in lending were also not addressed. Last Thursday, the three federal bank agencies issued proposed changes to the CRA regulations. These changes could be the most significant changes since 1995. But to make sure that CRA is changed in a positive manner, we must continue the American tradition of advocacy. NCRC has 600 member organizations. We will need every single one, plus allies in this room, to comment on the proposed changes and tell the regulators what they got right and what must be improved. Here are some high priority areas. CRA and race. CRA exams do not explicitly consider race. In 1977, Senator William Proxmire, the main sponsor of CRA, probably concluded that statute could not specifically mention race so that it could pass. As it was, CRA squeaked through Congress. However, there is room for considering race on CRA exams since the statute requires banks to serve all communities. CRA exams could consider lending to underserved tracts, which are disproportionately community of color, underserved census tracts. In addition, CRA exams could consider lending to people of color in geographical areas where lending disparities are particularly stark. As proposed last week, the proposed changes do not go in this direction. They will, on CRA exams, you'll see descriptions of lending by race, but that's it. They won't influence the ratings. We're going to push to try to change that. CRA and geography. In 1977, banks made loans through branches. During the 1995 changes, the agencies did not update CRA to consider lending beyond branches since the Internet was in its infancy. Now, online banks and other banks using brokers make considerable numbers of loans outside their branch network. CRA exams still mainly consider lending in the geographical areas where banks have branches. In addition, CRA exams must consider lending in geographical areas with substantial volumes of loans but no branches. This occurs in Birmingham. There is one very large lender making high volumes of small business loans in Birmingham, but its percentage of loans in low and moderate income tracts is a third to a half less than its peers. It has no branches in the metro area, and hence its CRA exam does not cover Birmingham. Its performance likely would be better if its exam covered Birmingham. The agencies propose to fix this. We must tell the agencies, keep this proposal, very important, would result in more small business loans to Bob Dickerson's clients. CRA and ratings inflation. About 98% of banks pass their exams and 90% receive the rating of satisfactory, which is like a B. There is no way that 90% of banks perform in exactly the same manner. If the 90% was split up to identify those banks that are barely passing or low satisfactory, this accuracy improvement in the ratings would motivate the laggards to improve. That's just human nature. You're caught out, you're going to improve. The result would be significantly more loans, investments, and services. Either a fifth ratings category could be introduced or a point system could be implementing to meaningfully view more distinctions of performance. I'm happy to report the proposed reforms to the lending test would introduce a point system and probably would be a significant motivator for the laggards to improve. But there's other subtests that still need to be enhanced beyond the proposal, like the community development finance test. Many other aspects of CRA exams need to be reformed, including better data collection. During the public comment period on proposed changes to the CRA rule, NCRC will be holding conference calls to go over the major items that need improving. We will help you comment on this critical proposal. Change is episodic when civil rights and fair lending laws have holes and are implemented in an inconsistent or half-hearted manner. This is an opportunity to close the holes in the CRA regulations whose net has frayed due to regulatory neglect over the 2 decades. Only strong and persistent advocacy can close the gap between the nation's democratic ideals and our less than democratic practice. It is time to implement those lofty words in the founding documents. It will take all of you. It will take more than a village. Please use your voice and comment during the next few weeks. Our nation's soul needs repairing. Grinding inequalities do not make for a harmonious society. Polarization and strife increases. CRA reform is an opportunity for multiple groups in society to be empowered. People of color, poor whites, women and minority-owned small businesses, people with disabilities, and other underserved communities. The challenge for us is to give positive proposals for change the backing they need. Rise up, move up, and onward. Thank you.